And guys, it's so wonderful to have you here. Today is going to be a solo show with just you and I. So I want to make sure that you have found your chat box and your Q&A box. Honestly, it's easier if you dump your questions in the Q&A box. I can manage those and check off which ones I've answered. But if you don't know how to work your Q&A box, no big deal. Find your chat box and enter it in any questions that you might have during today's presentation in there. I will do my best to enter all of that information, or excuse me, answer all the questions within the presentation. But as you guys know, there is an after party. Any questions that I don't get to within the presentation, we will clean up afterwards. But guys, this is a live recorded show. So I just thank you so much for joining me today. I do the Passive Investing Made Simple Masterclass. This is a weekly masterclass where I help you demystify the ins and outs of passive investing. We talk about all sorts of topics. That way you can go into your first or next investment with confidence. That is the most important thing. And again, some of these episodes I have a guest on. In today's episode, it's me. We're going to do a, like a little solo presentation. So today we are going to focus on the debate between single family and multifamily. Okay, the pros, the cons, the ins and the outs. Okay, and we're going to keep this at a pretty 30,000 foot view because multifamily is a very large space, but a lot of the things that I present today are there's gonna be a lot of similarities between anything 2 units to 300, 400, 500 units. But as you guys know, I do this masterclass to help you guys learn the biggest myths around investing that keep investors sidelined and them never getting into any sort of passive investment. We're gonna tackle some terms today and possibly a little bit of math, but also more importantly, in these masterclass series, in any video that I do, my goal specifically is for you to learn how to put the knowledge into use, again, so you can go into your first and next investment with confidence. And, let's go ahead and just bust a couple myths right now that keep investors sidelined. And we're going to break this apart a little bit as we debate single family versus multifamily. There's really 2 big myths that keep investors sidelined from ever getting into passive investing. And the first myth is they tell themselves, I don't have any control over the investment. Okay. We will dive into this myth pretty extensively today. But the second myth they tell themselves is that I actually won't make that high of a return if I move from controlled investing, where you own the actual real estate, like in a single family property, into passive investing. And again, I'm going to help kind of bust apart this myth again today for you as well. But if this is your first time here, my name is Whitney. I'm the Director of Investor Education here at PassiveInvesting.com. And I've been investing in real estate since 2002. Now, I started off completely by accidental landlord. I was doing live-in flipping and house hacking. But really, like I said, I started off by accident. I bought a property with a significant other. And a month later, that relationship fell apart and I had everything in my name. I owned the property, I owned the utilities, I owned all the headaches too. So back then there was no YouTube. I couldn't really teach myself how to do anything, online. So I went to Home Depot and I bought the Home Depot 1, 2, 3 book and taught myself electrical, plumbing, drywall, how to resurface hardwood floors. So I've done it all. There are some things that I loved doing in a flip, and there's some things that I quickly learned that I need to delegate out. But long story short, I did a few more of those live-in flips solo, and then my husband joined me, and we did a few together. And so we were really good at building up buckets of equity, but what we lacked was the ability to unlock our golden handcuffs. We didn't have a vision on how people actually retired off of real estate. You can't pay your grocery bill if all your equity is locked up in a flip on a property. So that's when it really dawned on us, after doing several of these flips, that we needed to hold on to these investments and create passive income for ourselves. So we did what we knew best. We dove headfirst into getting into single family property, and we scaled up a portfolio of about 30 single family units in state and out of state where we live. And we were still doing flipping in state and out of state to, continue to build up as quickly scale our portfolio. But then we just realized we had another job. Okay. Even though a lot of our single family properties were being managed, by property management, I was still very heavy in on the day-to-day decision making of that asset. And again, we're going to pick apart some of these pros and cons. And really, I decided that I was like, man, I want to start taking advantage of some of this income that's coming in and, step back a little bit from my day job, spend more time with our family. I also needed to take care of some ailing family members. And when I presented this to my husband, he was like, that's amazing, babe. This is awesome. I can't believe what you built. He's like, I want that too. I want to be able to step away from my job. And right then and there, I was like, yes, my husband has come to the dark side. He's going to now invest in real estate alongside me and more actively. However, I just couldn't wrap my head around how do we get to 80, 85 properties to unlock him from his job as well. And that's when we knew we had to transition into multifamily real estate. So we could acquire more units with each transaction, scale our portfolio a lot quicker. And in that transition, we had to re-engineer all of our systems. And that's when we discovered not only active multifamily investing, but also passive multifamily investing. Now, I'm not going to spoil this for you guys today. I'm not going to give you all the story right now, but I can tell you over time in scaling both actively and passively, we have been able to scale our our portfolio to 6,300 multifamily units, 1,400 self-storage units. Now, that is a vanity metric. A lot of you are like, yes, I want to be like that. Do you? That is the question. And I'm going to help you walk through a framework today so you can answer this for yourself. Most people, they don't actually want the unit count. What they want is the result. And the result is having 100% freedom and choice on how you spend your time. Now that in the end is what most people are after. In real estate, money is just the tool to get you there. All right. So again, maybe you guys are just like, you don't know where you fall on which side of the spectrum, and we're going to help you kind of work through that today. Now, if you're looking for passive investments, we can help you build that here. If you are like, I'm in, I want 100% of my time back, and I want to leverage real estate, we can help you do that here at passiveinvesting.com. We've acquired over $920 million of multifamily real estate and nearly that much in self-storage real estate as well. As you guys may or may not know, we've added in car washes recently. We have a real estate debt fund. But what I get to do here on a daily basis is work on helping you, the investor, educate yourselves to be comfortable in scaling your portfolio as comfortably and as quickly as you would like to. All right, guys. Now, anything that I go over today, I have to say is educational only. Okay, so this is nothing I cover today is financial advice, legal advice, tax advice. Make sure that you're gathering this information and incorporating into your plan and consulting your team and any professionals that you need to in order to move forward. Now, let's dive into our debate, single family versus multifamily. And guys, I'm going to walk you through kind of my thought process as I am kind of, weighed these different decisions in my investing career. So I just really wanted to first, let's define what single family is and what multifamily is, okay? Now, here, single family, we've got, Class A, Class B, Class C, maybe even Class D property, okay? It's a one unit, one door, okay? That's, you've got one roof, one water heater, one HVAC, you have one paying tenant, okay? That's a single family property. Now, multifamily, can take on a whole different spectrum, right? You can have your duplexes, 1 to 2 unit duplex, or you can go all the way up to like 400 or 500 unit properties or even larger. Okay, but in a multifamily unit, you are going to have an element of scale. Okay, now for us here at passiveinvesting.com, this picture with the multifamily that I'm showing, if you guys are joining with me live, that is actually one of our properties. This one is Braxton at Lake Norman in Mooresville, North Carolina. So that's one that I'm personally invested in as well. All right, now, why do we need to have the debate? Okay, a lot of people are like, do both. Well, maybe, okay, but really, the reason why we need to have this sort of debate is that you have a choice on how you leverage knowledge, either for yourself or with a team, what kind of expertise that you need to have, whether you're going to do it yourself or leverage a team, what markets you go into. The markets you're going to go into single family are going to be different than some of the markets you're going to go into for multifamily. Okay, the network, okay, the actual team that you put together, the brokers, the lenders, the insurance agents, okay, all those, the property management, that network differs on whether you're doing single family versus multifamily, okay? And the type of credit, the type of lending that you need and what you can secure is different between single family and multifamily, okay? That's why, you see a lot of people, they get really efficient at single family properties and it's hard for them to make the leap. And why is that? Is that they have to re-engineer this whole entire system in order to make the leap, right? But most importantly, it's the time, okay? And the time isn't so much of like single family versus multifamily, okay? It can be, right? You can scale through multifamily potentially much faster, but also how do you want to spend your time? Do you want to spend it, managing a property manager, managing the property yourself, or do you want to, spend it managing a team that manages multifamily, or do you just want to invest passively? Okay, there's a whole continuum here. All right, so let's go through some of the advantages and disadvantages of single family property. The advantage, and which could also be a disadvantage, is that you get one unit, right? It's familiar. Most of us have lived in a house before. This is a super simple transition, right? Maybe you live in your primary house and you moved and you decide to buy a new house and you decided to keep your old house as a rental, okay? You're essentially just buying a new primary. You're leveraging the same team over again. It's familiar, right? We've all had that single family roof over our head. Okay. Also in the scale, okay, you might be just getting one unit at a time, but also you're getting one unit at a time and maybe a little bit more affordable to do it that way for you. All right. When you buy single family property, there's potential for multiple exits. Right, you could sell retail, okay, on the MLS. Okay, you could also sell to another investor. Maybe you make it a short-term rental. Maybe you make it a corporate rental, or maybe you make it kind of an insurance rental for somebody who's been displaced by fire or flood. You could have lease options. There's so many things that you could really do with a single family that it's a little bit harder to do with a multifamily. It's probably easier to diversify markets, right? If you're just buying one unit at a time, you're probably putting less down. And so you're just like, you can break up which markets or even which sub-markets within an MSA that you're in, a metropolitan service area. It's easier and probably simpler to diversify your property management. Now, on single family properties, I know a lot of people don't really think in terms of diversifying property management, but that can be really effective for a couple of reasons. One, you're essentially diversifying your operators within your portfolio, how they manage the property, what kind of quality tenants they find, how they manage expenses and the CapEx. But also that probably geographically is helping you diversify as well. All right, and you have a succession plan. Like if one property manager isn't really working, then you can quickly move the rest of the portfolio over to the second property manager until you find another backup. All right, and also an advantage of single family property is lending is pretty attainable for most people starting out. Okay, and it's attainable for a couple of reasons. One, it's familiar. Right? You're not having to go figure out a bunch of different puzzle pieces on, large multifamily assets, how to secure lending. You're not having to go find a key partner that can lend you their track record and possibly even large amounts of money to secure a property. Two, it's, there's a whole program, government-sponsored entity program with Fannie Mae, Freddie Mac to help people get into homes. Now, there does come with some disadvantages, right? The CapEx on these type of single-family properties tends to be higher. Why is that? Well, you have each single-family property has a roof, it has a foundation, has some sort of HVAC system, water heater, okay? You're not having to repair one roof and service 4 properties or 10 doors. You have one roof, one door, okay? One thing that I don't have on here is vacancy. It's either 100% occupied or 100% vacant. So vacancy, which plays into your expenses, can be a little bit higher. Overall expenses are higher too. So like your taxes, your insurance, your property management is going to be higher. Property management on a single family property is probably going to be somewhere between 8 to 10% per unit. Larger multifamily units, or when you have a larger portfolio, you can now start negotiating those type of numbers downward. Now, you can also get capped on a single family property. And this means that on a single family property, an individual borrower can get loans up to for 10 properties. Now, if they happen to have a spousal equivalent, they maybe can get up loans upwards to 20 properties potentially. So otherwise, they've got to transition to commercial. All right, so it's a little bit harder to scale with single family properties. Okay, and get that good kind of like coveted, what we call the 10 golden tickets. And one of the big things here is that it's hard to control the growth on a single family property. Now, of course, you're going to buy in a location, location is going to dictate, right? It's one of the immutable laws of real estate. However, you don't get to control the growth on that property. Very little, right? Maybe you can do a rehab and bring up the property to speed with other properties in the market. But the value of the property is determined on what we call comparable sales. So the value of that property is only what the market is dictating for the last 6 months. So how I like to put it is it's, the value of your property is what the neighbor sold his for in the past 6 months. Okay, multifamily is different. Now let's talk about some of the ins and outs of multifamily. Okay, multifamily is not perfect, not by any stretch of the imagination. The advantage of going into a multifamily property, either actively or passively, is that you get more units with one purchase. Okay, some people would argue that it takes just as much time to negotiate a multifamily property as it does a single family property, so they could scale a lot quicker. Okay, you get to control the NOI growth. Okay, therefore the value on the property. Okay, you can actually have more units to rent, so you can move up the units on the property. You can actually control the profit and loss statement a little bit better, negotiating additional vendor terms, maybe better property management. And you can, on a multifamily property, you can actually add additional streams of income to the property. Perhaps, negotiating like a utility like fiber internet on the property, moving that utility to the actual, income statement on the property. You could add like storage lockers, package lockers. You can do an amenity fee charge, because you now have a pool and a gym and some barbecue pits and maybe some sort of activities on the property. Had somebody drop in the chat box, maybe you can add a cell phone tower to the property as well. So there's different ways that you can add additional streams of income. And that all feeds into what we call the net operating income. Therefore, you actually get to impact the value of the property a lot better than you can with a single family property. And it's easier to leverage a team. Okay, so, case in point, I might have 30 single family properties, and while I can give this over to a property manager, there's not a lot of margins in there for that property manager to manage that at scale, right? They have to, if there's a service call, they're potentially going to 30 different locations. Whereas On a multifamily property, maybe I hire a part-time handyman or maybe a full-time leasing agent to service 100 units, 150 units, 200 units, okay? I can actually leverage teams more effectively. Now, there are some disadvantages, okay? Multifamily, while I love it, isn't all for everybody, right? Exits can be kind of limited and lengthy. Not everybody can go out and secure lending for a multifamily property, okay? It's not as easy as a single family. It's harder potentially for somebody to diversify markets, right? You're getting a large building, okay, maybe 20, 40, 50, 100 units, and it's all in one location. So you really have to be very good about picking your market. You also have to be really good about picking who's going to be the property manager on that particular asset, okay? You don't, whereas I can take 30 single family homes and break it over multiple property managers, I can't do that very well with a multifamily building or at all, okay? The lender is, can be more of a hurdle on the multifamily property. So it can be a little bit more challenging for somebody to get in. They have to either create their own track record, and I'm going to show you how to do that if you want to operate your own large multifamily, or they have to go borrow somebody's track record and background and experience. They have to bring somebody on their team, okay? But the last piece on a multifamily building that I really want to draw attention to, and this is something that, I think all operators learned during COVID, but it was well known before then, is that the tenant base on the property is even more critical on a multifamily building than it is on a single family property. Why do I say that? Well, if you have just, one house and you have, kind of a bad tenant that got placed, they might annoy the neighbors until you can, either turn the property or get them out, legally, of course. Whereas on a multifamily building, your tenants are sharing walls. So it becomes just that much more, problems can be that much more magnified. All right, so as promised, there are some ways, if you're just starting out, if you're just like, I do want to have my single family properties and I want to start scaling here, I want to offer you a couple different ways that you can start scaling up into multifamily. One, I think is very attainable, is what we call the stacked growth model. So year one, you go buy a single family property. Now, maybe you upgrade your primary to do that, which is I'm a super big fan of right now, because most people have a pretty low interest rate on their primary property. If you can hold on to it and cash flow it, go buy a new one. Okay. Then the next property you acquire is a duplex. Okay. So essentially you're doubling your unit count with each transaction. So do a single family, then a duplex, then get a quad. Now you're prepared to jump into the commercial space. Okay, 5 units and over, you have to get commercial lending. You got a little bit of experience under your belt now, and you have some unit counts to substantiate your track record. Now go get an 8-plex, and then a 16-plex, and then a 32-plex, and you just keep on stacking like this. And just think about it, in 6 transactions, you would have over 60 units if you did a stacked growth model like this. And you could do a transaction a year, or you could do multiple transactions within a year, right? But that is a very viable way of scaling. All right. And then number 2 is what I call the leverage growth model. Okay. Now I love people having controlled real estate in their portfolio. I believe that personally for myself, this is real estate that I control. I can, manipulate on how I use the cash flow. When I take out like any sort of HELOCs or lending on, it's kind of like I use it like a little mini ATM. But there is kind of a critical mass here, right? When you hit about 8 to 10 single family properties, you potentially might have already enough property within your control that you should think about, how can I scale to get to the next level? And how I like doing this is reinvesting all of that income that you bring in through the equity and the cash flow on the properties, as well as active income, and maybe transition over into passive syndication. Now, you could actually transition very readily over into actively managed multifamily property, right? You would enter right over here at this like 16 to 20 plex level and start scaling up. But if you want your time back, all right, you can think about transitioning over into syndications. Now, there is another model here. It's also in the leverage growth category. Maybe you're like, I have no desire to do any sort of single family, Whitney, like, thank you very much. I just want to do only multifamily exposure, but have somebody else manage the, be the operator on the property. There's no reason why you can't jump right into the syndication model. Okay, of course, there's some, when you work with an operator, there's going to be questions that they ask. We want to make sure the investment's suitable. Now, how do you understand this? Like, how do we make the decision for us? Okay, like, what's the decision-making process? I've listed out some questions here. And you can take a screenshot of this, make sure that if you're joining with me live. But the first question you have to ask yourself is, what do you want? Okay. Now, a lot of people will answer this question with, I want $10,000 a month in passive income, right? Coming in. They answer it with a dollar amount, or I want to be able to leave my job, right? They have a tangible thing that they want, but really, I encourage people sitting with that question when they get in continuing to go down the rabbit hole of why do they want that, okay, until they actually get to a freedom that they're after. And there's some very common freedoms, right? Financial freedom, time freedom, location freedom, okay? The freedom to make an impact, right? Those are pretty typical freedoms that people are after. But sit with these two questions long enough and continuing to dig deep enough until you hit that freedom. What is it that you're truly after? Okay, what you want, that $10,000 a month, the ability to walk away from your job, okay, that will keep you motivated on a daily basis. That freedom that you actually hit, that's going to be your guiding star to measure all your investments against. Because once you understand your freedom that you're after, now we can pair the right assets to that freedom. Okay, this is where I really try to help investors, is if they're after the freedom of location independence, time independence, let's not go after like doing a flip model of investing, okay, because those things are not in line. Now, this is where I really dig in and try to help people understand that real estate is just a tool. Okay, don't let the identity rule. All right, so what is it you're truly after, and let's design that life that you really truly want. And then once you understand the answer to those first two questions, what do you want, why do you want it, now you have to ask the question, who do you have to become in order to get it? What kind of mindset do you need to have? What type of skills do you need to build? What kind of network? And that's where I really help you do that here. If you are seeking to make this transition from single family into multifamily, or car washes, or self-storage, and even make that transition into passive real estate. Guys, thank you so much. This has been amazing. If you're joining me live, don't go anywhere. Start dumping your questions in the chat box. If you are, listening to us on our podcast, be sure to jump over to passiveinvestingwithwhitney.com if you'd like to get additional information and tools to help you along your journey, as well as see our open deals. Until then, guys, thank you so much, and we will see you next week.